from break. At this time, we're going to move forward with our program. Up next, you will hear from Debbie Smith, the Administrator of Personal Income Tax, speaking about business income deduction and tax calculation.
Thank you, Marina. As Marina mentioned, I'm Deborah Smith, Administrator for Personal and School District Income Taxes, and I'm going to take the next 30 or 40 minutes and update us on the business income tax deduction. We'll go over business and non-business income and what some of those sources might be. We'll take a few moments and look at the 2013 and 2014 small business deduction, how we calculated your business income deduction at that point, and some of the changes along with some statistics of what has happened for those two tax year filings. We'll move on to Senate Bill 208 and the changes that have come about for the business income deduction for 2015 and forward. There are new forms and some new calculations. And then I'll finish up my segment with our new ITNRC form, which is the non-resident form. And that's where you'll take a look at allocating your business income deduction for the purpose of the non-resident credit calculation. So let's go ahead and get started. When we look at business and non-business income, we refer to 57, 47.20 and 21 of the ORC. A couple of key points really to keep in mind is that when you're looking at business income, you're going to be apportioning, and when you're looking at non-business income, you are allocating. And even though I say you're going to be apportioning, you're not necessarily going to be for this year. But the key point here is when you hear the word apportionment, know that you're talking business income generally, and the word allocation and allocating relates to non-business income. As we move forward and we look at how you're going to allocate and apportion your income for next year, I did mention one of the key changes, and there are 2 or 3 key changes for the business income deduction as it's moving forward for 2015 and forward versus what we did in 13 and 14. And one of those key things is the apportionment of the business income. Now you'll just be taking that. There won't be any apportionment actually on the business income form, but when it comes to that business income deduction, you'll be allocating that on the new NRC form, which flows over to the 1040 for the non-resident and part-year resident credit. So when we try to look at definitions of business income, or how do I know if I really have business income, we look at the definitions in the ORC, which says business income includes gains and losses that comes from transactions, activities, and sources that are happen in your normal, regular course of business. It's also for the acquisition, rental, management, and disposition of real, tangible, or intangible property, again, if that is an integral part of your day-to-day business operations. And then lastly, we look at a partial or complete liquidation of the business, which can also include the gain from that business if you had goodwill or potentially the sale of a property that was an integral part of your business. Now there was a case, Kemple v. Zano, that the Supreme Court, and this came to when we were looking at gains from a business, from sale of a business and sale of goodwill. And while in this case of Kemple v. Zano, they did find that those gains were considered to be business income, for this particular case, they didn't necessarily adopt and rely heavily on the 2 types of tests that we have here, although on a day-to-day basis, when you're trying to determine if your income or your client's business or your client's income is in fact business income, you can apply the transactional and functional tests. So the transactional test is going to look at the nature, the frequency, the regularity of that transaction. The functional test, again, it's going to look at, is it an integral part of your business? Is it something that your business really couldn't function without including this, something that's very integral? Now, if we take just a second and look at the opposite, what is non-business income? So we could suffice to just simply say, if it's not business income, It's non-business income. But when you look at the ORC, you see several examples of non-business income listed, and you can see some of those here. Compensation, rents and royalties, capital gains, interest. The thing is, some of these same items can also be business income. So again, you could look at the transactional and the functional testing and see if these certain types of income fall into a business or non-business type. So if we break some of those down just a little bit and we look at rental income, if you were going to determine if that rental income is business income, you're going to look at how that owner holds out that property. You know, are they renting it just a few days a year, or is it rented on a regular, consistent basis? You often hear of us talk here of the Muirfield case, where you're renting the house out for just a week. Or nowadays you hear people who trade their homes online and maybe they rent it for a week out of the year or two so they can go vacation in someone else's house. Those are not considered regular and consistent basis. Is there a property manager or a maintenance person? Although that is not required in order for this to be business income, if you had that, that might certainly lean itself toward being business income, the rental income to be business income. When we talk about royalty income, you know, are you actively engaged in a trade that produces that royalty income? Jingles, we talk about this one. Are you writing jingles, and that's what you do every day, you write jingles, or did you just happen to do one thing for a business Christmas party or something? So again, are you actively involved in that? Is that your main source of income, that type of thing? Interest and dividends. You know, it's going to likely be business income if it flows through and earned from a pass-through entity, if it's reported on a K-1. You know, if it's your personal investment that you have, your personal checking account, that's going to be non-business income. You know, capital gains, I talked about this just a moment ago. If that gain was used as you were generating income in a trade or business, then the gain from the sale of that trade or business is going to be business income as well. So now when we talk about compensation and guaranteed payments, we get a lot of questions on this type of thing. If you are at least a 20% or more, have 20% or more ownership in a pass-through entity, that is going to be, those compensation and wages are going to be recharacterized, and they're going to be considered a distributive share of income. So if you are a 20% or more owner, those guaranteed payments and compensation would be included in your business income. Now this section of the code applies to personal income tax, pass-through and employer withholding. If those wages and salaries are less than 20%, they would be not considered business income. Those amounts that are business income now are subject to apportionment and all of those rules because they are considered business income. Now, here's where we said if those guaranteed payments are if you're less than a 20% owner and you receive compensation or guaranteed payments, that is considered non-business income. That income would not be subject to apportionment. It would not be claimed on the SBD or the business income deduction for 15 and forward. Now, to be clear here, one of the questions that we received in the past are, well, what about if I'm not talking about compensation and guaranteed payments? What if I didn't receive this type of compensation, if you will? I'm just simply a 10% owner of a pass-through entity, and the profits from that pass-through entity, can I apply that toward my business income? And the answer to that is yes. We're only talking about a 20% or more ownership when you're talking about compensation and guaranteed payments. That percentage does not come into play when you're simply talking about your profit from the pass-through. Now going forward, when you compute the non-resident credit, it's been on the 2023 in the past, the NRC form going forward. These wages, if it's going to be compensation and payment and you're less than a 20% owner, you would just add those into your income and apportion it. They would not be compensation under Ohio law. Again, this is if you're less than a 20% owner and you get compensation or wages. When we go to look at this and verify that, we look at W-2s, we look at 1099s, K-1s, we look at the federal 1040 form, looking to determine if you are a 20% or more owner. We may also have to reach out and ask for some other supporting documentation. At this time, we're going to pause for just a second and provide your next code word. And that code word is business. Okay, now the next few slides, we're going to do a bit of a flashback, if you will. I guess 2014 isn't quite over if we still have amendeds and things coming in. But for the 2013 and 14, the first 2 years in which we had a business income deduction, at that point it was the small business income deduction, you could deduct 50% in 13 and 75% in 14 of your Ohio small business investor income. And again, this was the portion of your Ohio business income that was included in your Ohio adjusted gross income. So only the portion that was apportioned to Ohio. Keep that in mind because I'm going to say something drastically different when I move forward to 2015. For 2014 calendar year, so last calendar year, if we look at all of the people that were eligible and benefited from the small business deduction, we had over 400,000 taxpayers who took a deduction. And in the far left-hand column, you can see this is actually the deduction amount. It's not the tax benefit amount, it's the deduction amount. So you can see mostly 50,000 and less is the amount of a deduction that individuals took on their personal income tax return, 405,000 taxpayers. The deduction amounts totaled almost $8.5 billion. If we move forward to this calendar year, 2015, you can see that an additional 60,000 taxpayers benefited. So almost 470,000 taxpayers benefited from the small business deduction. And you can see the income, or the deduction amount, drastically increased as well to over $13 billion in deductions. A couple of reasons for that. One, we said that the deduction itself increased from 50% to 75%. And then secondly, we've had some amended returns this year. We sent out about 130,000 letters to individuals in early March of this year. We looked at their federal income and we saw that they reported income on schedules C, E, and F, some that would predominantly be considered business income. And yet when we looked at their Ohio return, they had not taken advantage of the small business deduction. So we sent those letters out and the amended returns started coming in. So we still have about 12,000 or so amended returns in-house that we're working as those continue to come in. But that's also what's included in these 15 numbers. It would be the 14 filings as well as some amended returns for 13. If you look at a flat tax rate of maybe 3.5% or 3.75%, that's over $500 million in actual tax dollar savings. Now we'll move forward and begin talking about the changes for 2015 business income deduction. We had some changes that came out in House Bill 64, but we knew some of those changes needed to be tweaked, that it wasn't actually written as everyone had intended. So we waited on Senate Bill 208, which passed, I guess it's been about a month ago now, and in that is where one of the big changes came in. We've had a lot of questions about this to say, is this right? So now you're going to be able to deduct a portion of your Ohio adjusted gross income that is business income. Now note here, I'm not saying that is Ohio business income, apportioned to Ohio. That's how it was in 2013. You could take a deduction from your adjusted gross income, the income that was Ohio business income. Now we're saying it is all business income. So whether that was earned or received in Ohio or another state, it is eligible for the business income deduction. Also, while not specifically a part of Senate Bill 208, one of the changes going forward for 2015 is that there will not be a related member add back. We heard a lot from you in 2013 and 14 filings, whereby if you had a related member add back, maybe you were paying wages to your son at your company, and in order for that to be included in your Ohio adjusted gross income, you needed to add that back for it to be eligible for the SBD. However, your son was also including that in his Ohio adjusted gross income, so it presented the double taxation problem, which was definitely an unintended consequence of the original small business deduction. So the related member add back has been eliminated going forward for 2015. Now when we take a look at the deduction itself for 15 and 16, the deduction is the lesser of 75% of your total business income. It still has a max cap. It's 75% of the first $250,000 of your business income. So if you're married filing separate, the cap is $93,750. If you're single or married filing jointly, the cap is $187,500. Since it's 75%, those caps are the same as they were for 2014. It's just now you're including all of your business income instead of just Ohio business income. Now for 2016 and forward, that deduction percentage is moving to 100% of the first $250,000 of your business income. Again, it's subject to your filing method and that your filing status. So if it's a married filing separate, it would be 100% of the first $125,000. But for married filing joint and single taxpayers, it would be the full $250,000 deduction. Now as we move forward and we start to look at examples and look at the actual business income form for next year, the ITBUS, you want to keep in mind that it's going to be based off of your federal schedules. So it's going to be laid out as looking at business income from your federal schedule B, C, D, E, and F. While it is based off of those federal schedules, your software products will not directly pull those amounts from those federal schedules. You could have some amounts on those various federal schedules that are actual personal amounts rather than business income. So when that federal schedule is completed when doing the federal return, and you come over and get ready to complete the Ohio return, and then specifically the IT business form inside your software, you're going to have to look at those federal schedules B, C, D, E, and F. And if you say that all of that income is in fact business income, you can simply pull the bottom line from there and plug it into the business income form. If you know that part of the income on those are not business income, then you're going to want to deduct that before you bring that amount over to the business form. Now one of the good things though is when you are completing that federal form and you say, I have ownership in pass-through entity XYZ Incorporated, and you say, here's the FAIN. When you provide that entity information and the FAIN number when completing the federal form, that entity information will flow over to the ITBUS, so you will not need to complete that entity information again. One of the other things we've talked about, I know the Commissioner mentioned this in his opening piece, is that the business income has its own tax table this year, and it caps out at 3% for 2015. So it's a graduated rate table that mirrors the same type of rates that we have in personal income tax for your non-business income. However, at the business side, it caps at 3%. And here's a look at what that is. Simply, as I said here, it looks just like the income tax tables for the regular personal income tax. We are calling this tax table 3. The other tables are obviously 1 and 2 that we've had for years. And you can see here that any income over about 41,000, almost 42,000, caps off at a 3%. Now, as we move forward for 2016, for the business income tax, we won't have this table at all. All business income for 2016 and forward, after you've taken your business income deduction, all remaining business income will be capped at a flat 3%. Now we're going to get into looking at the actual form itself, the new ITBUS. Now keep in mind, if you're still filing for 2013 or 14, or you're amending for either one of those years, you would still use the ITSBD form that's been available the last 2 years. But for 2015 and forward, it's the new ITBUS form. And as I mentioned earlier, here is part 1 of that form, and you're simply determining from your federal schedules, as we mentioned before, what parts of the income reported on those federal schedules are actual business income, and you place those here in Section 1. Section 2 is very similar to Section 2 of the SBD form. This is where you're going to actually calculate the business income deduction. Now, when I say calculate, the good news is this form is totally inside your software programs. For 2013 and 14, as many of you know, you went to our website, you got the SBD form, you calculated it out manually, then you got to the bottom line. Once you knew what your business income, your small business income deduction was, you plugged that number into your software on Schedule A. Moving forward, the entire calculation will be done inside your software program. And here, as I said, in Section 2, one of the key lines is line 8. This is going to be all of your business income. So simply from the lines here, lines 1 through 7, all of those federal schedules, you're going to total those, and that comes to line 8, unless those total up to be greater than your FAGI. If on your federal return you had all of these schedules, and let's say they came up to $100,000, but then you had deductions before you got to your FAGI. Say maybe your self-employment or any kind of things there, whereby now your FAGI is $90,000. On line 8 here, you would start with $90,000 rather than the total of all of those federal schedules. You never want to have on line 8 business income that is greater than your federal adjusted gross income. From there, you're simply going to multiply by 75%, determine, is that my amount, or have I actually capped out and I take one of the amounts on line 10 based on my filing status. And then line 11 is simply your business income deduction. Now, part 3 of the business income form is going to be the calculation of the tax that is due on that business income. Remember, we said we have a new tax table for that. I know Tequila earlier, as she went through the actual 1040 form, would have indicated that there are 2 tax liabilities on the 1040 now, where you add your non-business tax liability and your business income tax liability. This is where you calculate that business income tax liability that's flowing over to the 1040. Again, your software is going to take care of this for you. But a key part of this to note is line 13. Here you don't want this to be greater than your line 5 of your 1040. And I've got some examples coming through in just a moment that will show you that. But line 13 here is key. Line 14 is simply where you've calculated the liability and you're bringing that over to 8B on the 1040. So here's where I wanted to talk a moment about the line 13 here from the business form. What amount actually goes here? Is it my taxable income? So is it my business income less my business deduction? Or should I bring over line 5 from my 1040? So on the left-hand side, you see the calculation of the first few lines of the 1040 return. So let's envision that all of this is business income. So if I've got $500,000 of business income, which is my federal adjusted, my Schedule A deduction here, the only thing I have is the business income deduction, and I'm capped out at $187.5. I've got a line 3 on the 1040, my Ohio adjusted gross income of $12,500. I've got an exemption amount of $1,700. My Ohio income tax base, what I would normally calculate my income tax is $310,800. But if I move over to the business form and I total all of those lines on the first section of the business income form, all of my federal schedules, and I say I have $500,000, I take out the deduction, I'm at $312,500. So on line 13 of that business income form, I want to either put what I had on line 12, which in this case is $312,500, that is higher than my line 5 of $310,800, my 1040 line 5. So I want to put the lesser of those two lines on line 13 of the business form. If all I have is business income, and I start on the business form with that, if I didn't revert back and just tax myself on what is on line 5 of the 1040, I could lose the personal and dependent exemption amount. And that is certainly not the intent, nor is it the way that the ORC is written. So if you find that all you have is business income, there are a couple other scenarios where this could happen as well. But if you follow the direction and simply take the lesser of the ITBUS line 12 or the IT10 line 40 and apply that to line 13, you'll get the correct calculation and the better tax benefit to you. This is the back side of the ITBUS, the business entity form, and this is where I said your software will automatically bring over the entity name, the FANE, this type of information for you inside your software program. You will not need to retype this. Now we're going to move through a couple of scenarios, and we'll start out with the really easy ones. So John is single. He has federal Schedule C business income of $100,000. For 2015, what would be his business income deduction? 75% or $75,000. Again, for 2015, he's still single, he has Schedule C, but if he had $300,000 of business income, what would be that business income deduction still for 2015? 75%, but he's going to cap out based on his single filing status at $187.5. If we take those same scenarios and we move forward to 2016, John has $100,000 of federal Schedule C. Again, it's 2016, so the only difference is he gets 100% of the first $250,000, so his entire business income is going to be in that deduction. If all he had was this $100,000 of business income, he wouldn't have any tax liability at all. Same scenario again for 2016, but when he had $300,000 of business income, he's going to cap out at the max for 2016, which is $250,000. That's a pretty good deal, to earn $250,000 of business income in Ohio and not owe $1 of a tax liability. Now we'll move on and we'll add some other income sources to this. So again, John is still single, but he's reporting income from federal schedules B, C, and D. However, he's saying that part of the income on those federal schedules is not business income. So while on Schedule B, he reported a total of $30,000, he's indicating that $20,000 of that is business income. He's saying that all of his federal Schedule C is business income and $15,000 of his Schedule D. So when you total up those business income, he has $110,000 of business income. So at 75% for 2015, he's going to have a deduction of $82,500. But for 16, when he gets the 100%, again, that entire $110,000 is going to be deducted, leaving him with a zero tax liability, again, if that's his only source of income. Now here, John is married filing joint. He's reporting B, D, and E types of income. And here he has guaranteed payments, but he is less than a 20% owner. So on schedules B and D, he's indicated that $30,000 and $50,000 are his business income portions of those federal schedules. For Schedule E, this example is telling us that he had $50,000 in guaranteed payments on the Schedule E. However, remember we said he is less than a 20% owner of that pass-through entity, so his guaranteed payments are not eligible for the business income deduction. So when we total here, we simply get $45,000 of business income. We apply the 75% for 2015. You can see he has almost $34,000 of a business income deduction. And for 16, it's again the full 100%. Now this is the same exact scenario, except in this case, he is at least 20% owner. At least a 20% owner. He got the same guaranteed payments, but because he's at least a 20% or greater owner, we will include that $50,000 of guaranteed payments in the total when we're calculating his business income. So here you can see he has $95,000 now of business income rather than $45,000 in our example when he was less than 20% owner. So again, apply the 75% and the 100% for 15 and 16, and you can see what the business income deductions will be. We'll take another moment here and pause for our next code word, and that code word is entity. Okay, as we move into the last section of my presentation, we're going to talk about apportionment and the business income deduction. So remember I said in the very beginning of the presentation that you're not actually apportioning anymore on the business income form. If you can envision the SBD form for 2013 and 14, we had the apportionment calculation at the bottom of each form. And you completed one form per entity. So if I was a part of 3 different pass-throughs, I would complete 3 different SBD forms. I would do the apportionment at the bottom because, again, the business income deduction was only eligible on my Ohio apportioned business income. And if you can recall, as we've looked at the business income deduction form, the ITBUS moving forward, there's no apportionment on there because, again, one of the key differences is you can include all of your business income there. However, we're going to have to take a look at allocating that business income deduction as we move forward in calculation of the non-resident credit. So for pass-through entities, if you're filing a pass-through entity form, in the past we've used the IT 2023 for the apportionment and of the non-resident, for the allocation and apportionment calculations, and that has been used for the non-resident credit for both a pass-through form and the 1040 form. Moving forward for 2015, personal income tax will not use the 2023. The pass-through entity, if you're doing a pass-through entity, you'll still use the 2023 moving forward. For personal income tax, you're going to be using the new IT NRC or the non-resident credit form when you are looking at calculating your non-resident credit. The non-resident credit form is very similar to the 2023. You're going to see a lot of similarities. It shouldn't look like a drastically new form to you. We have swapped this year pages 1 and 2. Last year we swapped the summary piece. For years, I think it's part 4 or part 5, the summary, I think it's part 5, the summary section, which we're going to get to in a moment, it was page 1 in prior years. Last year we moved that to the last section because you can't really do a summary until you've done all the other pages. So some of the other changes we made this year, moving forward for 2015 filing, we swapped pages 1 and 2. So page 1 is now your non-business income, and page 2 is still your business income. So for each separate entity, you still would require a page 2 of the NRC to do the income apportionment for your non-resident credit. I think that I pretty well covered all of this. We moved the individual income tax deductions. This is one thing. From the small business deduction form, you might remember we had part 1, which was all of your income sources that might be eligible for the SBD. Part 2 were deductions from that. Those deductions are no longer on the business income form or in the business income section. We have moved all those types of deductions to the non-business section. And here's an example of what that looks like. So they're in part 1. Remember, we moved the non-business section to part 1 moving forward. And here are some of those deductions. They are now in the non-business section. So when we take a look at what the new ITNRC, and again, this is part 5, this is the summary section, looks just like it looked for the IT 2023. The only change are lines 4 and 5, and this is really due to changes that we made on the 2015 1040 return. I know Tequila had pointed out earlier that on the 1040, when you're looking at your Schedule A, we used to have you net your Schedule A additions and deductions and just bring that netted amount over to the 1040. Now, since we're having you bring over the addition amount from Schedule A to line 2A of the 1040, and then the deduction amount comes over as line 2B, when we do the summary section here on the IT 2023 for pass-throughs and the non-resident credit for personal income tax, those are 2 different lines here as well. So that's line 4 is your additions from Schedule A, and line 5 being your deductions from Schedule A. And this is where we would want to take a look at, how are we going to apply the business income deduction, which is in the deduction part of Schedule A. What are we going to do with that, and how's that going to look when I'm completing my non-resident credit calculation? So I've got a few scenarios moving forward here for just that, the calculation of the non-resident credit as you're using the new ITNRC. So in this first example, I have $400,000 of business income, and for the sake of this very easy example, I just have business income. I have $300,000 of business income earned in Ohio and $100,000 of business income that was earned outside of Ohio. So when I look at line 5, and let's look at 5C, based on my $400,000 of business income, 75% of that is going to have me capping out at 2015. My business income deduction would be the $187.5. I've hit the max. So then I look at, when it comes to my non-resident credit, what amounts of that $187.5 do I put in column A, using it with my Ohio business income, and how much of that business income deduction should be on 5B against my non-Ohio business income? Well, the law doesn't really give a complete direction on how this would be done in this calculation, so we've made a policy decision that as long as there is Ohio business income great enough to take the entire business income deduction on 5A, you can go ahead and report it there. So in this example, we have a maximum business income deduction of $187.5, and we had $300,000 of Ohio business income. So we'll put that full amount here on 5A so that as we move forward in calculating our non-resident credit, we've got 6B divided by 6C. But you see in 5B, we don't have any of the business income deduction there, which is good for Ohio taxpayers. Here's a very similar example. Here we have business income, and then we also have non-business income. So we have $50,000 of business income in Ohio and another $50,000 outside of Ohio for a total business income of $100,000. So if we look at line 5C, we can see 75% of that, $75,000 is my total business income deduction that's reported on Schedule A. But when I come over here and begin the calculation of my non-resident credit, you can see that because I just had $50,000 of business income in Ohio, I can just use $50,000 on 5A of that business income deduction. The remaining $25,000 needs to go over into column 5B against the non-Ohio business income. Now, while I have some wages or some other type of income in 2A, that is not business income, so I can't use my business income there to take the full $75,000 in line 5A against the Ohio. You can only take it, again, to the extent that you have Ohio business income. And again, when I say take it, I'm saying actually in the calculation of your resident credit here. You've already taken advantage of it in your small business deduction. Now here, when I come to the non-resident credit, this is a scenario. I have $200,000 of business income, but note here, all of it is earned outside of Ohio. So the full 75% or the $150,000 business income deduction is going to be in column B against the non-Ohio business income. And this is just a quick example. I've been showing you very easy examples. This is just to note that you could certainly have something on 5A. Here we have $10,000. Maybe at the point when I was a part-year resident and I earned some wages in Ohio, and I have $125,000 of wages on line 2, maybe I made a 529 contribution of that $10,000. So you can certainly have something in 5A that doesn't relate to the business income deduction and still have a number there. So here I've left you with some contact information. It's our general personal income tax number, also the tax practitioner line. You can reach out to our website at tax.ohio.gov. In the top right corner, there's a contact us. You can always provide us some feedback, ask us questions there. They will route that to the proper tax. That contact us works for all taxes at the department, not just for personal income tax. Sign up for our tax alerts if you've not done so in the past. We can download our mobile app. We've got Twitter going, Facebook, so lots of ways of trying to keep everyone abreast with all of the information. I'm going to go ahead and see if I had any questions. I do have a few questions here that I'll go through. I do want to also take one moment to note that we are in the process right now of updating the entire section on our website that relates to the business income deduction. We are updating all of the frequently asked questions. We'll have two sections of questions out there, one that pertains to 13 and 14. Again, when you were apportioning that Ohio business income, because the FAQs and things will be different for 15 and 16 and going forward. We're also working and hope to have out in the next week or so a whole new page for what's new for 2015 and forward. So that would cover all of the items for forms and the changes that Tequila covered. So we're diligently working on that. You would get to both of those by just simply going to tax.ohio.gov, and from our homepage there'll be links that direct you either to what's new for 2015 or to take you over to the business income section. My first question here is, will the new IT NRC require detail for all entities as did the 2023? If we're talking about detail, it says detail for all entities. So if we're talking about the entity name and the percent of ownership and the FANE, yes, all of that information will be required. As I did mention in the presentation, page 2, which speaks to the business income section, even moving forward, while when you're doing, let me back that up so we're really clear. When you're doing the business income deduction form, the ITBUS, you're just completing one of those per tax return. But when you get over to the ITNRC, you are in fact completing page 2, which is the business section, for each entity, and you would provide the detail for each entity. Question is, the SBD is now all business income for 2015, not just Ohio-sourced business income as it was in 2013 and 14, correct? And although I did cover this, it's a very good question because it's one of the biggest changes, and we still get this question. We've done, between Tequila and myself and Matt Dodovich, we've done probably 15 presentations on the business income deduction in the last month or so, and we get this question because it is such a big change. It's just a wow moment that yes, all business income, not just your Ohio business income is subject, but rather all business income. The question here is, for the SBD, or the business income deduction, if a taxpayer has only W-2 income, but also has rental property that is rented on a regular basis, is this personal investment income or business income? I wish there was a simple yes or no answer to this, but there isn't. But if you go back and look at the transactional tests and the functional tests that we looked at, but let me give you a scenario where it's most likely business income. So if this is a rental property, so you have a regular job where you work at every day where you earn wages, which is what I think this example is saying, a taxpayer that only has W-2 income. They say in this example they only have W-2 income, but I think they're also saying they have rental income as well. And you have one rental property, and you consistently rent it 12 months out of the year. You get rent income the first of every month. You've had this rental property. You continue to have this rental property. I think you have a very good case to say that, yes, that is business income. So it's not like you have to totally be only having rental income. You can absolutely have W-2 income and have a job in which you receive W-2 income, and you just have one or two rental properties. But again, if they're on a consistent basis, you're not just renting them out for a week or two here and there, that is more than likely business income. This is a very similar question which we get all the time, and I'm going to go ahead and say it even though I don't have a definite black and white yes or no answer for you. What about gas and oil royalty on wells? Business or non-business income? Again, we might look at the frequency of that. If you're getting a monthly income from that, you might very well find that this is on a consistent basis. It's from property. You really have to, again, I hate to just refer you back to, but you have to look at the functional and the transactional testing. If you have specific questions on scenarios of this where you could lay out the scenario for us better, you're always welcome to contact me or Matt Dodovich, and we would be happy to look at your specific scenarios and see if we could provide further guidance. And I think I'll have one last question here. When will the instructions to the Ohio Business Income Deduction Form be available? These have just become available in the last few days. We should have all of our forms on the website now. We've removed them from the draft site, and they're simply in the main forms area. So if you go to tax.ohio.gov, across the top, you see a forms button. Go ahead and click on that. And then in the next screen that pops up in the center area, just choose from the drop-down menu, individual income tax, and put in for 2015, and you'll be able to see all of the forms for next year in their finalized format. And thank you for your time this morning, and Marina is going to go ahead and wrap us up.
Thank you, Debbie, for the information you shared. At this time, we're going to pause and take a break. We will return at 10:50. Please be mindful that all audio and video will be suspended at this time. Please leave your GoToWebinar up and running for the entire duration of the break. Thank you.